do you read this miss on CPI? I mean, the consensus was 8.7, 8.8, came in at 8.5.
Yeah, I view this number actually the same way I view the decline or the deceleration in the overall economy, right? So everyone's been thinking about recession the first half of the year, when in fact the economy is just decelerating from 6% growth towards trend. And at some point along the line, consumer prices were going to decelerate as well. And so the question is not deceleration, the question is decelerating to where? And I don't think this number, and Powell's been very clear, these headline numbers and these CPI numbers aren't really going to dissuade the Fed very much. First of all, we're still well above the 2% target. But secondly, I think the more important number was what we saw in the second quarter with an acceleration of employee costs and negative productivity. And Powell has made very clear that beneath the CPI and all that, the noise that's part and parcel with any monthly CPI number, is a fundamental imbalance in supply demand in terms of labor that's going to keep an inflationary bias on the economy. And that bias needs to be reduced if they want to get back to 2%. And ultimately, that means creating a higher unemployment environment at some point down the line here.
9.1%, was that the peak then, Stephen? And does a level over 8% plus look fairly entrenched to you? Is that a new normal? Is that a plateau that's going to remain for the foreseeable future, given the stickier components of inflation look like they're pretty tough to budge?
Yeah, it is. I think the inflation rate, first of all, I tend to look at the 3-month and 1 month as opposed to the year over year. And I think that inflation on its own, and given some of the other slowdowns we're seeing, I think inflation's slowing down into the 4 or 5% range. Core inflation is a reasonable expectation. But again, that's too high to a 2% target, right? And also, let's be very clear here. These retail sales numbers next week now start to look very interesting when you look at real retail sales ex autos and gas, because you had in real average hourly earnings month over month, you had about a 5-6% increase in earnings, and you had a 5-6% increase in average hourly earnings, and you also added 500,000 odd people to the employment rolls. And I don't care who you are, you spend more money when you're employed than when you're unemployed, and so that's a lot of consumer firepower. So some of this decline in deceleration in inflation can very well be offset by increased consumption. And this is part of what Powell and what I was just saying about a fundamental imbalance between labor in the labor markets that needs to be cooled down regardless of what these monthly CPI numbers bring.